Welcome everyone to this webinar of the International Center for Tax and Development. My name is Giulia Mascagni, I'm Research Director at the ICTD, and it's a great pleasure to host and moderate this meeting. The title is Rethinking Tax Registration, Stumbling Blocks and Building Blocks. And what we will be talking about is taxpayer registration. Now, taxpayer registration is a process of bringing firms into the tax net who aren't yet there. And within tax registration, we're particularly interested in those processes of mass registration campaigns. Registration in the simplest form takes the shape of assigning a taxpayer identification number to firms who don't yet have one. And mass taxpayer registration often means registering and enrolling into the tax registry large numbers of firms who previously weren't there. That can take the shape of going door to door, or perhaps using databases other than the tax administration ones, for example, those of business licenses, trading licenses, and bring into the tax registry those firms who weren't there yet. So that is what we're interested in. And of course, this is an issue, taxpayer registration, that tax administrations across the African continent, but also beyond, have been spending lots of efforts. And there is a strong rationale for that. A part of that is that all firms, we're speaking particularly about firms, but also individuals, I'm sure, in the discussion, everyone should pay their fair share, however little or small. And of course, being within the tax registry is a first step towards that. The second part of the rationale is that, of course, having taxpayers into the registry allows the tax administration, but also the government more generally, to know who they are, to know their tax base. And that is useful for revenue purposes, but also for other areas of economic policy. Think about initiatives and policies to promote entrepreneurship and to improve the business environment and so on. So there is, of course, a strong rationale for registration. In the past few years, what happened within the ICTD is we started a few projects that weren't directly aimed to challenge that rationale, but ended up providing a lot more evidence on things that often don't happen in the way that is expected in those registration campaigns. And we thought we would come together within the ICTD to write a policy brief about what we have learned about those challenges in the process of registering new taxpayers, and especially in those campaigns to mass register taxpayers. Highlight those challenges, but also highlight what we think are some lessons learned going forward on how to do registration better. So that brief is now available on the ICTD website. My colleague Max Gallien will give a presentation of that at the very beginning. After which we will open the floor to our speakers. That is really the most important part for today's meeting, to hear their perspectives on how this issue of registration and mass registration looks like from the perspective of tax administration. We have 5 colleagues from tax administration. Unfortunately, the 6th speaker wasn't able to join us, but we're hoping to capture her contributions separately, and I will introduce them as we go along. So to start with, let me introduce Max Gallien, who will give the presentation of the ICTD policy brief. The title of the brief is Why Mass Tax Registration Campaigns Do Not Work, and he's going to give you a lot more details about that. Max is a research fellow at the Institute of Development Studies and at the ICTD. He's also the research lead for ICTD's Informality program and has been writing and publishing extensively on this topic, including one of the key research studies that served as background to the brief and the brief itself. So Max, over to you for your short presentation, and I will then introduce the other speakers as we go. Thank you.
Thank you very much, Giulia. Can someone briefly unmute themselves and confirm to me that they can see the presentation and it's in presentation mode?
Yes, it is. It's perfectly visible. Thanks.
Wonderful. Thank you very much, Giulia, and welcome everybody. Good morning, good afternoon, depending from where you are joining us. As Giulia mentioned, I'll give a brief introduction to an ICTD policy brief called Why Mass Tax Registration Campaigns Do Not Work. And as you can probably tell from the list of authors on this opening slide, it's an unusual ICTD output in the way that it's not based on one particular study, but it's based on a variety of different pieces of research conducted throughout the center, as well as conversations with partners and colleagues. And especially because these conversations are meant to continue today in this webinar, I will try to keep my comments as brief as possible. One thing to say up front, perhaps because of the rather attention-grabbing title, is to just reiterate the point that Giulia made, that the focus of this really is on mass tax registration campaigns, and particularly door-to-door campaigns. It's not a comment on registration more broadly, but particularly on these kind of registration pushes. And there's a good reason why we started thinking about that. And it is that there's been a lot of buzz over the last couple of years in policy circles around mass registration campaigns. There's been a lot of registration optimism. Part of that is rooted in very optimistic forecasts of how much potential money can be made through mass registration campaigns. The often cited missing gold mine, especially with respect to informal sectors. There's large projections that usually kind of map the amount of untaxed revenue, the amount of untaxed income in countries, and is usually quite optimistic about the amount of that can be captured through mass registration exercises. The second reason for a lot of the optimism, a lot of the buzz around mass registration campaigns has been around this idea of further knock-on benefits of decreasing informality, of getting more and more economic activities within the tax net. Some of that has been around the idea of tax morale, the fact that the tax morale of already registered enterprises will increase through an impression that everybody's paying their fair share, as Giulia mentioned. There's also an assumption that increasing formal competition as opposed to informal competition will be beneficial for an economy more widely. There's also an assumption that there will be concrete benefits for newly registered firms. There are certain features that we usually associate with formal companies, such as easier access to credit, easier access to government contracts, or to international markets. So there's an assumption that registering firms will not only be good for a revenue perspective, it'll also be good for the firms themselves. Now, the starting point for this policy brief was not necessarily the sense of optimism, but an increasing amount of data accruing through different research projects, but also through conversations with partners that really highlighted registration disappointments, that highlighted that often these campaigns fall short of their expectations. And there's two wider themes to that that's worth highlighting. The first is that the revenue that these campaigns bring in is often vastly overestimated. This might be due to the fact that original projections are often a bit optimistic. Original projections are often based on an estimate of the totality of untaxed income or wealth in a context, while registration exercises then often primarily register smaller firms. They often register smaller urban retail firms, which might not be reflective of the totality of uncaptured income or potential revenue. There's also the important issue that especially Giulia and her colleagues have done a lot of work on, which is that registration itself does not always translate into tax payment, that people might be filing, but they might be nil filers, or they might not be filing at all, that there are multiple steps from sheer registration to actual tax revenue. And one really important point to highlight is that some of the more optimistic estimates of what mass registration campaigns can bring in often underestimates the costs. It often forgets about not just the costs of doing the actual registration, but the costs of following up, the costs of administration that follow that. One of the more counterintuitive points of critique has been around fairness, because intuitively, tax registration is an inherently fair exercise. All firms above the relevant legal threshold surely should be registered. There's nothing unfair about registering them. But in public consciousness, mass registration exercises are often seen as unfair. They might be seen as unfair because they're perceived, or they're in fact more likely to target smaller firms, while some larger firms are not being targeted or not being fully taxed. There's often a perception that these exercises ignore pre-existing burdens of smaller enterprises, be that through informal taxes they're paying or through formal fees and levies that they're paying to local municipalities. And a further factor that has kind of furthered this sense that fairness might not be at the heart of this is that some of these knock-on benefits of newly formalized firms that we were talking about earlier do not always seem to be forthcoming. that just because a firm is formally registered for tax purposes, it might not immediately have better access to credit. It might not immediately have better access to government services or higher productivity, or a variety of the other features that we usually associate with formal firms. Now, our point at that moment was then not to discard registration in general, or to kind of discard mass registration exercises in general, but really to rethink them, to think about what has been going wrong, what can we learn from that, and how can we think about them differently. And that's really where this conversation today is meant to start. So we have three things that we want to highlight, but really curious to see what our partners and colleagues think about them. And the first is that there's really an issue to be had about targeting. That's partly due to the mechanisms of implementation, partly due to the kind of dynamics that these registration exercises often take on. They seem to often be skewed towards, in fact, registering smaller enterprises. What is maybe needed is to think of new ways to structure these enterprises, to run these mass registration campaigns in a way that target higher income earners. The second is to think more on potential outcomes beyond revenue. So when we were doing work on the ground with revenue authorities and partners, it was often very clear to them that some of the original revenue projections might be overstated, but that some of the important benefits from registration might lie outside of the immediate revenue. So this might increase a sense of informing taxpayers about the work of the Revenue Authority through registration. It might be building future taxpayers. There might be an educational aspect to it. And I'd be amiss, given that it's my colleague Giovanni Occhiali's birthday today, if I didn't mention a point that he's made really strongly in the past, which is the importance of registration in gathering information for governments, in using good tax registers as a basis for better industrial policy. And the final point in this is there will not be an ICTD presentation without it, is the importance of fitting registration exercises to the relevant context, and for us to have a more open discussion about what registration exercises fit which environment, fits which other institutional processes. And for all these reasons, I'm really, really excited that we get to discuss this today with our colleagues in the panel. And I will end my remarks here, aside from saying I'm really looking forward to the presentation. And if anyone wants a slightly more comprehensive and well-put summary of the arguments we're making than when I was able to give this morning, the policy brief is on the ICTD website. And I think with that, I will end and give back to Giulia.
Thank you very much, Max. This was really informative, and you were also able to stick to your time, which is very much appreciated. Thank you. Now I would like to pass the floor on to our first speaker, who is Edward Groening. I'm going to ask all speakers to share your experience of tax registration and also your reflections on what you've heard from Max. So Edward, as I said, is the first speaker. He is the head of research at the Eswatini Revenue Service, but he's also a longtime partner of the ICTD. He's been incredibly active in tax research and in thinking about issues around tax, not only in Eswatini, but really across the whole continent. So it's a great pleasure and honor to have you open the discussion. I will pass the floor over to you. You have about 5 minutes. Thank you.
Okay. Thank
We cannot hear you, Edward, so let's give it a few seconds to see if you're able to come back. Otherwise, I will ask Damacrine, you're next in line. So if Edward isn't able to be back online within a few seconds, I might ask you to go first, if that's okay with you. Edward, can you hear us? Okay, let's start with Damacrine Nyandigisi. We're going to get to Edward in a second. Damacrine is manager of academic research at the Kenya School of Revenue Administration, KEZRA. And of course, she has a long career working both within KESRA and the Kenya Revenue Administration. And I have a feeling, Damacrine, you will tell us as you speak that these topics are of particular interest to Kenya. I know there is a big policy interest in formalizing the informal sector and taxing the informal sector. But I think you also have a personal interest in these topics. I think you have even studied those topics in your own master thesis a few years back. So I'm very much looking forward to hearing your reflections from your long experience in this area. So over to you. You have 5 minutes.
Thank you very much, Giulia. Great introduction. Thank you for that. And Max, thank you for the brilliant presentation and the piece of work on this particular topic. I'm going to get into it and just talk about taxpayer registration. Yes, it's of great interest, Giulia. So I want to start by asking us what really is the role of taxpayer registration? Why do we have taxpayer registration? Do we just get in the numbers for the sake of having the numbers in the system, in our databases, or is there a particular role the taxpayer registration plays? So the first role, the reason we have taxpayer registration is so that we can have the taxpayers meet their taxpayer obligations. So when you're talking about taxpayer obligations, we'll be looking at making payments. They're able to file their tax returns on time and really give accurate declarations. So when we do a mass registration, and I totally agree with Max and the study's findings, when we do mass registrations, what we are doing is we are having a blind approach to revenue collection, to management of revenue collection processes, ideally. And that has a very negative impact to tax administrations. For instance, when you do a mass registration, and if we are looking at the informal sector, some of the thresholds are very low. So if a taxpayer is unable to pay their taxes, then you have a taxpayer in your database who is not going to file nil returns, who is not going to file at all. And then in most of our systems, we have what we call penalties and interests. And in systems, this means that at the end of a due date, after a due date, the taxpayer is automatically going to get a penalty for not filing or for not submitting a return. That has another impact. You then start having issues of debt, inaccurate debt portfolios in the system. So I think before tax administrations, before we delve into mass registrations, we really have to think of the outcome. And that is one of the points that Max brought out. What do we really want to achieve when it comes to mass registration? Is it going to be a positive or a negative impact to our processes? And most times it's a negative impact to our processes. So one, I would like to really challenge us to go back to thinking about the outcomes and the negative impact that mass registration has. The other thing that I want to bring in is the value of the data we have in our databases. What is the value? Are we just interested in the numbers? So if I have 50 million taxpayers in my database, in the taxpayer registration database, is that enough to say that I am, as a tax administration, I am achieving excellence in terms of revenue collection? Or do you want to have a small number of taxpayers, but of high value? So then you have active taxpayers in your database. And when you have active taxpayers in your database, you are able to account for your revenue, even for revenue forecasting purposes. You are able to say that I have X number of active taxpayers, and by the end of this due date, you are guaranteed that this revenue is expected from the X number of of taxpayers. So key things, let us look at the outcome, one, and let us look at the value and the quality and the impact that mass registration has on data quality. Mass registration has a very negative impact on the data quality, and the impact is we end up moving to debts that we have to write off because we went through mass registrations. So this is very, very valuable, a great topic for discussion, and I'm also very interested in getting feedback from some of my colleagues on the same topic. Thank you, Giulia. Over to you.
Thanks, Damacrine. You managed somehow to both stick to your time and also cover so much ground. You talked about the impact of registration on process, which is incredibly important, and the blind approach to registration, which is exactly the kind of thing we're talking about here, but also the quality of data, the stability of revenue. It was so rich. Thank you very much. I'm hoping I can see Edward is back. Network problems, of course, can always happen. So Edward, can you just confirm that you are back with us, your camera and microphone are working, and if so, we can come to you right next.
Yes, thank you, Giulia. I'm back, and sorry about that. We tested and everything was working well until technology happened. I'm not sure if I can proceed.
Yes, of course, technological problems always haunt us, so don't worry at all. Yes, you can proceed. I had already introduced you before, so over to you for your initial remarks.
Okay, thank you, Giulia, and good morning, afternoon, colleagues, wherever you are in the world, depending on your time zone. Again, thanks to Max for the paper. It's a very well done paper. I think it brings in a discussion that we rarely bring in, even in revenue administrations. We just keep wanting to increase the number of taxpayers without thinking of the other impacts that this brings to us. So this is a very good paper, and I think the rationale it brings, it points to us that we should just go beyond increasing numbers and registrations, but think about productive registration. And if I were to bring in this issue in particular with our context, we have engaged several times in these mass registrations with the aim of increasing our numbers, sometimes going for physical on foot activities to look for taxpayers to register. And as you understand, the key challenge around this mass registrations, as Max tries to bring them, is its effect on the cost structure, because we are bringing in more revenue, more taxpayers. To get to them is a cost, to manage them is an additional cost, but the revenue that comes there is very limited. So the marginal benefits of it are limited. Even then, if these taxpayers come through our systems and we register them, we tend not to have the resources to complete the registration and the compliance to ensure that they comply, which then brings us to low filing statistics, nil filers, loss-making companies. And like the paper has said, some of them will file once, the day you discover them, after that they are gone. And chasing them again becomes a big challenge. And then there's that issue where we sometimes even force register them for VAT, which weakens the system of the VAT. As we know, this is an interlinked system. So if you put in weaknesses into it, you create more administrative issues for yourself. And there you have taxpayers that don't need to be there and are draining the system out of refunds and out of compliance. And of course, the diversion of the resources that could be easily be used to better service and manage and educate the taxpayers are now placed on chasing after these taxpayers. And then in terms of this particular challenge that it also brings, you will understand that these registrations sometimes they're used to chase for other things other than just revenue administration. Hence why we end up having these large numbers, for example, licensing. And you find that this brings in a lot of regressivity because the small taxpayers are already paying smaller fees that are disproportionate to their size. And then now you're bringing this registration burden and all this, that makes it the whole more regressive in its nature. And then the other thing we tend to copy, forgive if I use the wrong language, the advanced countries which tend to register everyone, but they have this digital ID that can easily help them to tax or to track the taxpayer across, and then they'll be able to easily identify the active and non-active, which in our case, as African countries, we throw everything into one pot, and then we have difficulty managing it, bringing the point that you mentioned about the cleanliness of the database. And we have a dirty database now, which we also create more problems for us to manage. I think for now, I would put it in a sense that informality cannot be addressed by mass registration. We have to find other ways to work around informality. It can't be mass registration because this creates more problems than it creates benefits. And I'll put it here for now. Thank you, Max, and thanks, Giulia. Thank you.
Thank you very much, Edward. Again, really interesting intervention there about, you brought in yet another area where I'm sure we have lots to do, Max and others as well, about regressivity and the fact that registration doesn't arrive in a context where there isn't anything else, but it actually comes on top of other payments that might not be taxed in the standard way of thinking about taxes, but they are certainly tax-like, and they do represent a burden which is often regressive. So thanks a lot for making that point, and others related to data and other ways to tackle informality. That was very informative. I'm going to move to Philip now. If you can turn on your camera, I'm going to make sure that that your connection is working. Great to see you, Philip. Philip Kargbo is the Senior Director, Monitoring, Research and Planning Department at the National Revenue Authority in Sierra Leone. And Philip, I'm particularly happy to have you on the panel today because I know that Sierra Leone has recently undergone a tax registration exercise of small and medium enterprises in Freetown and perhaps elsewhere as well, you will tell us. And I know that there are lots of lessons learned from that exercise, both things that worked and things that didn't work, perhaps unexpected. I very much look forward to learning from your experience. So over to you. As others, you have about 5 minutes.
Well, thank you very much, Giulia. And also thank you so much, Max, for the presentation. It has just enlightened us and then come up with the things that the challenges actually are characterized when it comes to mass registration. But of course, I know others are saying, consider it, rethink as very important, I said, but to say the things why mass registration does not work, I saw the topic as a bit negative. I would have rather say, what can you do? What can you do to make mass registration work better, rather than say why mass registration does not work. I know in the context of informality, for us in revenue authorities, we are only caught with the objective of the measurement to say, what is revenue to GDP ratios? But then look at the GDP in most of our developing countries here. It's mostly driven by the agricultural sector, which is also subsistence, largely informal. So once you try to formalize the informal sector, then at least our revenue GDP ratios we think will be better. So that's why for us as tax revenue authorities, how to actually formalize the informal sector is something that's actually important to us. And I see that mass registration is one form that we have been using to see how we can get those who are not registered into the tax system, get them registered and then they contribute as well in the tax system. And so the topic itself is very important. And for Sierra Leone, we just did one recently, 2021, where we had a block registration exercise. It has indeed several challenges, but again, as Max said, which is very important in this presentation, it depends on the objective for which the mass registration is actually set up. And to me, that is what matters. For us, it was not just an issue of revenue objective. We had the revenue aspect of it, which was one, but then it coincided with the period where we are implementing a new tax administration system, which was the integrated tax administration system. And with that, we needed to verify the information of existing taxpayers, and of course, get taxpayers that were also not in the tax register, get them registered, but also expand it to also improve on the database of the rented property. So it has something like 3 or 4 objectives, which we wanted to achieve. So it wasn't just a revenue objective. So to us, the fact that we're able to now register the taxpayers, who are able to verify existing taxpayers, because there were new requirements for registration into the new tax administration system, which was kind of, it has to be biometric. And for sole proprietors, for individual taxpayers, you needed to have a national insurance number, which was the biometric nature. And this was a new addition compared to what we had before. So it became difficult for us to, so there was need for us to get updated information of the existing taxpayers, as well as also register taxpayers that were outside of the tax state. So that's why all of that had to be done during the ITAS implementation period. So we're able to now register taxpayers who are not into the tax register, into the ITAS, and register them at the end of the day, we did over 8,000 increase, 8,000% increase in registration at the time when we were doing the mass registration as the block registration. But then also the other objective, as Max indicated, is not only about revenue and even about increasing the registration numbers, but it was also about the awareness raising. We had areas within the Freetown, the Western area, where we did the block registration. They thought because they already rented their property, their business, their stores, they were not supposed to pay rental income tax. All they thought was they were already paying property tax to the local council, which is not a tax collected by Revenue Authority. But then it was during that exercise they knew that it wasn't only restricted to paying the property tax, they also have to pay the rental income tax. And they knew that the Revenue Authority had a role beyond the Freetown City Council in registration process rather than just the Freetown City Council. So there were other objectives that we tried to pursue. Of course, the lessons in the exercise were quite huge. As others have already said, the quality of the data is a challenge. Because had a huge resistance from the taxpayers in terms of actually cooperating with the exercise. And so that's why sensitization here is critical in the point of doing mass registration. If the taxpayers, the business are not quite convinced, they are not quite sensitized about the exercise, they will not cooperate. And when they do not cooperate, it also affect the quality of the data. Not only, in fact, the completeness of the process, because they will keep giving excuses to the enumerators, and they have to go and come again. The business owner is not around. You have to go and come. That is just one excuse, but also the quality of the data. And that also brings in the training and the quality of the enumerators that we send out to the field. Because sometimes while they key in, you see that these are not complete data. There's nothing you can do with this data. So we have to institute follow-up sessions. And those follow-up sessions, as we said, they can be as well expensive. But then if they are successful, I mean, that will also help us to have adequate data that we can use for the process. There are several other lessons we can learn. But to me, what would have also been important is how can we make this mass registration work better, rather than saying it doesn't work. To me, these are the things I thought we should have actually highlighted. The completeness of the process. I mean, with us here, we started first. It was more of identification of the business, because for revenue authorities that do both business registration as well as identification, and then as well as taxing, that is fine. But with us, we can only identify. In terms of registration to ITAS, we need the role of another stakeholder who is outside of the revenue authority. So we need to collaborate with them. And at the point we are doing the mass registration, they were not prepared. They said they had capacity challenges for them to actually join us in the process. So which implies we only did one aspect of the registration, which was the identification of the businesses, but then registered them with the business registration, meaning that had to do follow-ups. So that extended the process. And that's why also it's important in the process of mass registration to have a longer period rather than just giving a short time for the registration process. In fact, that even puts pressure on the enumerators to even do things that they shouldn't do because they want to meet their targets within the shortest possible time. And that also affects the quality of data. And what is important, as I said earlier, is sensitization. Sensitization is important, the timing of the exercise, as well as having a pilot. It's important to have a pilot so that at least you can have some experience in the implementation of the pilot before you roll out to another phase. So this, time has got me. So as a result of that, I cannot go beyond that. Thank you.
Thank you very much, Philip, for bringing that experience. I'm sure we're going to come back to you with a bit more questions and information about the experience in Sierra Leone, but definitely what you mentioned resonated a lot about, you talked about multiple objectives in those registration campaigns. It cannot be only about revenue. And I think the way you've done it in Sierra Leone really illustrates that very clearly, how it needs to be part of a more holistic view about how tax administration is organized, and it's really only in that context that one can put those registration campaigns. And thanks also for making the point about follow-up sessions and the fact that this is a process rather than only something that happens at a specific point in time. There was a lot more there, so I'm not going to repeat what you said, but I really found that really interesting. We're now going to Ronald Waiswa. Great to have you in the panel, Ronald. Ronald is a specialist on applied research and statistics at the African Tax Administration Forum. He previously worked for a long time at the Uganda Revenue Authority in the Department of Research, and has been collaborating with the ICTD for quite some time. He's been very active in producing lots of research on many topics that are very central to what we're discussing today. And of course, he's not only bringing the ATAF perspective, but hopefully also some of the perspective from Uganda, as you've been centrally involved in those registration exercises in your previous capacity. So I very much look forward to hearing from you and learning from you. Over to you.
Thank you so much, Giulia. I think because of time, I'll go straight to the point. I hope the network doesn't disturb me. First of all, let me start that by saying that mass registration campaigns have been on for the past more than 10 years, actually, especially in Uganda, where I'm coming from, where it started with door-to-door registration through the taxpayer register enhancement project, and that shoot up the register significantly. But also efforts to even register more are increasing every year. Revenue authorities are coming up with more initiatives actually to register more through the most new approaches is using a third-party information, matching and matching. And this, we also saw it shooting even the register even higher. And of course, this had actually more challenges actually, because it even brought in even more productive taxpayers on the register. Now, it is also true that we really have to get worried about the so many unproductive taxpayers on the register, because this is accounting for up to 70%. But also, I need to say that this is not only a few country problem. It seems to be a general African problem, because we have seen this in countries that have attempted to do assessments on their taxpayer registers: Uganda, Kenya, Eswatini, and actually even South Africa. And South Africa is already developed, and therefore it seems to suggest that it's not only a problem for the low income or the poor countries actually. So it is a general problem. We have very many unproductive taxpayers. But then coming to the discussion, I think we need to know what the actual problem is. Is it wrong to have these small and all everyone registered on the register? I think no. This actually should be registered. And actually, even by law, the revenue authorities are right to register them by law, because when you look at the income thresholds for someone to actually get registered, some of these actually qualify. Many of them qualify. Maybe some don't qualify. But again, it is very difficult for the revenue authority to tell who qualifies and who doesn't qualify, because I mean, there are no records. These are small businesses without records, and therefore no one knows. So they just register everyone, and then everyone gets sorted within the system. Now, I think also it is important to register them because currently, one of the major key sources of revenue to revenue authorities are people in employment income. People that employees, these are really heavily taxed. So I think registering some of these businesses will help to reduce the pressure on the currently overtaxed group of taxpayers in the system. I think also that if the revenue authority has the capacity to handle the data that is coming through, it should not be a problem. They can go ahead and register. That is even more important for the revenue authority and some of us, the researchers, that we have more businesses that we can learn about to inform our research and policy analysis. I think the major issue, in my view, as far as mass registration is concerned, is the information we are collecting on these taxpayers actually of value? is it of good quality? That's where the biggest problem is, because the truth is, from the assessments we have done on taxpayer registers in Uganda, the registers are dirty. So the problem of mass registration is that registration is fine, but the data that we are bringing in is not useful. These are taxpayers that you cannot identify. All the identification information, most of it is misleading. You cannot tell where they are. So that's where the biggest problem is. The other question I think we need to ask ourselves is, what is the cost as far as revenue authorities are concerned? What is the cost that they're actually putting in vis-a-vis the benefits? The truth is, many of these are actually not paying. What we saw in Uganda is that most of these newly registered taxpayers pay once, and either they don't pay forever or they will pay once in 5 years. Why? This is because these are taxpayers who can only pay if you knock on their door. Now, revenue authorities don't have capacity to register you this year, and they come every year to enforce revenue corrections. And that's why we find them inactive. Last year in Uganda, I know URA doubled its revenue corrections from presumptive taxpayers. We have been correcting some little money, and they actually went more than double the revenue. Why? Because they were deliberate to go and move door to door, reinforcing revenue corrections on the already registered taxpayers. So these taxpayers that have registered, they will remain unproductive, they will remain inactive until when revenue authorities actually go back to correct revenue from them. Now, what should be done? I think two things. If I'm summarized given the time that I'm allocated, what should be done? Two things. One, for revenue authorities to benefit from mass registrations, I think the most important thing is, like I say, let's emphasize the quality of information that we are getting. Are we able to locate them? Are we able to go back or even to call? Because the contact details are wrong. The contact details are maybe for informal agents that are actually registering this, because we saw this in Uganda when we were doing the analysis of the taxpayer survey. Identification information were actually belonging to these informal agents that are helping them to register. So you have a person on a register that you cannot even find, or you have one person representing. We had cases actually where one individual, the informal agent, was having more than 1,000 taxpayers, all linked to his email address, all linked to his phone number. And there are reasons why they are doing that, because most of these guys don't know how to register. And therefore, they depend on this one person to register them. And now, because the TIN, the taxpayer identification number, is sent on an email address, this person registering them keeps putting their email addresses there so that they get the TIN and they have control over these people to pay him before they can release the TIN. So that is where the problem is. The other issue is, in terms of improving the value, I think at this point, we've registered enough as revenue administrations. I think what we need to do now is to focus more. We can split resources into two. Maybe 70% should focus on vertical registration, and then the other 30% can still focus on that horizontal registration, which is door-to-door registration. Now, what do I mean by vertical registration? We have businesses, we have taxpayers on our register that joined and only declared that maybe my source of income is employment. But along the way, this is a taxpayer that has now established new businesses, has maybe built property, is getting maybe another job, etc., and that information is not updated. I learned this from the Ugandan experience. When we were doing some study on the rich, taxing the high net worth individuals in Uganda, one of their key achievements was that they were able to identify new sources of income among the rich. So what does this mean? That we have these ones that we are already celebrating that they are registered, but we have so much information that we don't know about their income sources. So I think at this point, revenue administrations need to focus more on vertical registration, going back to the register and saying that these are our large taxpayers, these are our medium taxpayers. Do we have all their income sources registered?
I will come back to you. I will come back to you on that question of higher income actors within the informal sector, with informal activities, because that is, I think, related to one of the questions that have been coming up. So I'm going to ask you to hold your thoughts on that. I know you have lots of experience on this area, and I want to hear from you in a second. But for now, let me just pick up on something that you said, which I think is a very good link to then move on to our last speaker, Denis Mukama. I'm going to ask you, Denis, if you can, in the meantime, switch on your camera. So I'm going to make sure that your connection is working. But you mentioned this issue of unproductive taxpayers and the fact that when you register so many taxpayers, many of them are inactive and they will remain inactive. And in fact, that is something that Denis and his team and team from the ICTD as well have been working on in the context of Rwanda. So we worked on a study that is called active ghosts, because these are ghosts in tax terms because they don't pay any tax, but they are active because they keep filing declarations. So this issue of nil filers, being on the registry and not really producing any revenue or substantive information for the tax authority is an issue that you mentioned, Ronald, and one that perhaps Denis can also speak to. But let me introduce Denis. He is the Assistant Commissioner for Research Planning and M&E at the Rwandan Revenue Authority. Denis has been working with the ICTD and with me personally for, I think we're coming up to 10 years very soon in the next couple of months. So it's a great pleasure to have you join us despite multiple commitments. Thanks a lot for making the time, to you and everyone else. He has worked extensively on several research projects. One was this that I just mentioned on nil filers, but also on taxpayer education, which is a theme that has been coming up in the context of registration being a process. And perhaps, Denis, you want to speak to those themes or any other consideration that you have in mind from Rwanda. I know Rwanda has experience of those mass registration campaigns, and I'm sure we can learn a lot from Rwanda's experience and your own considerations as well. So over to you.
Yeah, thank you so much, Giulia, and of course, thanks to the fellow panelists. Maybe before even going to the themes, I just want to bring in the perspective of Rwanda in terms of mass registration. This is something that, of course, like everyone has said, and I'm sorry in case I repeat what others have said because I just joined in a bit late. But in terms of the mass registration in Rwanda, I think there's always been a bottleneck in our country, or that led to this mass registration in terms of when you're coming up as a tax administration, coming from a situation where you do not have resources, we don't have the administration, where people are not used to paying tax, where the legal framework is new, where there are no systems. So literally anything that has to do with running a tax administration and ensuring that it's functioning and leading to the mandate of maximizing revenue generation was hinged around massive registration. It was bound on the fact that if you're going to expand your tax base or your revenues, you have to make sure you expand your tax register. You have to make sure you bring on board each and every, regardless of the quality. So that means that any building blocks around tax administration, around registry, were towards massive registration. I'll give you some examples in RA. These block management, it was deliberate that block management, actually, as they started, they were mainly built around massively registering, dividing the city into different blocks, assigning tax officials, and they go door to door, making sure that whatever business, whichever door is open in terms of a business, is registered. So then all the compliance initiatives were geared towards around massive registration. It was believed that as you grow the registry, you definitely are going to grow your registry. The same comes with now as we brought on board, embraced IT and all that. Even then, all the IT and the integration with other agencies was merely to make sure that who do they have in their registry and how do we get them in our registry, regardless of the quality. Now, because of this, we saw our tax registry. For instance, I think in 2020, during the COVID period, or 20 years, we got all the people who are registered in the land register and brought them into our tax registry. 40,000 were registered on income tax. Some of these are, people who have land that has been idle. Some of this is, life in heritage and all this. And then all of a sudden they see messages coming from the tax administration that you've been registered for income tax. So because of a huge outcry, we had to rekindle on this process and this behavior, and then we had to deregister them. So you know what that means? It 40,000, and then it's causing all upheavals. So, and again, what does that mean? Again, not so far from what Ronald has just said. You're bringing in all these non-quality entrants into the registry. We've done that, and then now we have to get to a point where we know what is the value. When it comes to our filing and their filing and payment behavior, you find close to what, 64% of our tax registry are all actually either non-active, they are non-nil filers or non-filers. And this was established from our study, of course, that we worked with ICTD team. Now, what does that mean? That means that we are sitting on a very huge chunk of taxpayers who are adding no value to our, instead adding a cost. And because it is also embedded in our compliance initiatives, that even when we do our education campaigns, we tell them most of the narrative is around, you're registered, what you do is at least make sure you file a nil return. And instead of telling them, you know what, why don't you, if you're not active, why don't you just, inform the tax administration, go and deregister so you do not have to keep going through all this narrative. So it's because of these things that we've seen that, the quality of the registry and the kind of, entrance into our registry. Now we have changed a bit of our approach as I already. Now we have engaged, into targeted registrations. And again, this has also been because there's two areas of demarcation that I think the tax administrations in our regions face. There is wanting to monitor how these businesses are progressing so that you see who is actually supposed to be in the registry. So you're forced to do the kind of massive registration. But then there's also who is actually supposed to be in the registry by the legal provision, who you should be following. So because of that thin line, we've become, you end up massively registering and then directly taking them into the registry. So what we've done in our new registry manual or modules is let's integrate with all these third-party agencies. Let's monitor these teams that have been registered from, for whatever reason, maybe for getting a land or maybe, a hope of having a business that is required that you should be registered by the tax administration. Let's have them in the system, but let them not come into our active taxpayers. So this is mainly for monitoring purposes. Should the EBM invoices, should the transactions see you, trigger you as we're monitoring? Should you be triggered as a massive importer? Should you be triggered as a massive, seller and interactor of land? Then that means you're actually doing business. So that the system should flag you and say, this is, now we've gotten a big taxpayer in there. So please follow up on this person. Give them the assistance, engage them, because now they're not just, they actually actively, they've met the threshold and they should be brought on board. So we've devised all these means to make sure that, we change the way we register massively. Let me stop there for now, and then I'm happy to come back on the follow-up sessions.
Thank you, Denis. I think your remarks were really nicely complementary to what others have said. And I think the experience of Rwanda registering those 40,000 taxpayers and then going back to deregister them, it's a really interesting one. And everything you said about unproductive taxpayers and the need to really separate those who are registered but are unproductive in revenue terms and those who are active. I think that is a big theme that has been coming out in other interventions as well. Thanks, everyone. This was incredibly interesting already. There are a few questions from the audience. So what I'm going to do now is I'm going to read 3 of them that I think are quite related to one theme, and I'm going to then get you to reflect on that. As I do that, I'm going to encourage our audience to keep asking questions because we do have a little bit of time, and this is the time when we discuss your questions and comments. So please keep them flowing through the Q&A box. So the first question is from John Sabanda, and it goes, how do we know about business earnings when the business is not registered? And this is related to the discussion about targeting higher income earners. There is also another question that is related to that, that says the tax administration cost of mass registration may be high, but don't you think the administration cost of targeted registration would be equally as high, or maybe even higher, the work that would go into identifying specific potential taxpayers and actually following up with the registration? So those comments are very much about this idea of targeted registration, one asking how you target if you don't have information on them, and the other one asking, well, wouldn't the cost be high anyway, because you would still need to get that information and follow up with them. And I think this is related to a third question from Hanro Nisten that says, could you please elaborate on the targeted potential taxpayers in Kenya? So this is specifically about Kenya Damacrine. Is it only high net worth individuals, businesses? So again, asking about what those targeted registration efforts look like. And Anna-Laura is also asking, I would be interested if there is a gender component to envisage better sex disaggregated data in those campaigns. So of course, the gender component coming through there as well. So I will at this point ask all speakers to comment on that if you want. Not all of you have to do that. But maybe starting from you, Damacrine, since there was this specific reference to Kenya, and I'm sure Ronald will have things to say about high net worth individuals, which is where, apologies again, I stopped you earlier because you were over time, but I knew we would come back to this issue. So I'll also ask you to provide some additional remarks on that, as well as everybody else. But Damacrine, if that's okay with you, we can start with you.
Thank you, Giulia, and thanks to all the panelists. That was a brilliant 1 hour of information. I want to start on the question on how do we get information on the businesses if they are not registered. The first thing I want to say that is crippling tax administrations is the silo mentality. The silo mentality and lack of collaborations. I want to give a good example. In Kenya, for instance, we have what we call counties. So in most of your countries, it will be subnationals or districts. At this level, licenses are being issued to all the informal, those operating in the informal sector. All these businesses we're talking about, all these individuals are in the radar of a lower at the subnational level. What would that mean if we were to collaborate with the subnationals, if the counties, if we were to collaborate at that level? And it goes beyond informal taxes. It even goes to property taxes, because there's an element of property taxes that is collected at that level. So the first thing that I would say is, let us think out of the box. Let's not focus so much on mass registration, but look at organizations or partners who already have this data that we can then tap into. Because if you go to counties, if you go to the subnational level, and I think this has been done in Ghana, if you go to that level, you are able to tell in this particular district, there are X number of businesses that are registered. And they have the capacity, because they have officers on the ground, literally on a day-to-day basis, collecting these licenses. From that same data, you're able to tell the income generated from those businesses. So before you bring these businesses to your tax net at the national level, at tax administrations, you were able to tell if they are of value, you were able to tell how much tax they can pay, and then you were able to narrow down and say, for this category, this is the approach we can take. We can then bring them to the net. You already have their data. If you collaborate with these other partners, so you can then bring them to the net. And by the time you're bringing them to the net, they are of value. You are able to tell, I have brought X number of taxpayers to the tax bracket, and I expect this number of tax revenue from this taxpayer. So collaboration is really key. We need to stop working alone and with other tax administrations and come down to other organizations that we can partner with. In terms of the second question again on the second approach again on the informal sector, this particular group is unique and they have certain needs that are unique to them. I'll give a good example. In Kenya, we have what we call NSSF, National Social Security Fund, and we have National Housing Fund. So they do cater for a certain percentage when it comes to medical benefits or other benefits to the informal sector, particularly. When you look at the informal sector, there are certain basic needs that are key to them. If we were to stop thinking of revenue first and think of meeting their needs, what is it that they need that we can partner with some of these organizations and say, look, if you come on board to pay your taxes, if you come on board to register, we will meet you halfway and target a certain incentive. It is not easy because there's a cost element to it. Think about it. It's a one-time cost element to it. If you are able to come up with an incentive to the informal sector for that particular one time when you'll be registering them, and in return, you are asking them to register and declare their income, you have them in their radar, they voluntarily registered themselves, and you are able to then tell this is the amount of income they are getting. So even if it's a certain percentage of presumptive tax, you can then apply that to those who have come on board. So I think we need to think out of the box when it comes to this particular group. And to Philip, on the mass registration in Sierra Leone, it's a difficult process. And data quality, I happen to have led a team in Kenya Revenue Authority on cleansing the data. The impact it has afterwards, the cost involved in cleaning that data and cleansing the data is way too much. And that goes with what Denis said. So again, I would really encourage that even as you're moving to a new system, instead of having a mass registration approach, you have the business registration service. In Kenya, we have what we call business registration service, who are in charge of registering all companies in Kenya. We have registrar of persons. So we are able to tell that this individual is 18 years and above, and they may have an income. So again, let's think out of the box, because the impact that mass registration has is, when it comes to handling the negative impact, it becomes a very heavy task. To the targeted potential of taxpayers in Kenya, the tax-based expansion unit looks at all the taxpayers who have an income. So we have a team that is looking at the large taxpayers. We have a team that is looking at the high net worth individuals. We have a unit that is also looking at the medium and small enterprises. And then we have a unit that is also looking at the informal sector. And what unique thing that this unit that is dealing with the informal sector is currently doing, they are now going to associations. In the informal sector, we have various associations that help those in the informal sector run their businesses. So what we are doing now is we are looking for the associations and partnering with them, trying to see how we can partner with them, support them, and in there introduce taxpayer education forums for the groups. So we have what is called Juakali Association, which has the highest number of informal sector individuals. When you partner with them and introduce taxpayer education forums to them, when they are holding a meeting with the informal sector registered under that association, you are able to come in and first educate them, help them understand about taxation. And then after that, you now get to understand how they're operating their businesses. What are the challenges they're experiencing? How can you plug in? And after you plug in, you build that relationship. After you build that relationship with the association and these taxpayers in the informal sector, then collaborating and having them come on board becomes an easier approach. So in Kenya, we are targeting all sectors that have income, and we have units that are looking at all that. So I again, I'm not for mass registration, but let's have targeted registrations. And where we really want to look at the informal sector, let us look at partners. Let us look at organizations that we can collaborate with. At that point, look at the data, look at what it means in terms of income, so that by the time you're bringing it to the net, to our databases, then you are able to see value. You're able to see value. Yes, thank you, Giulia.
Thank you so much, Damacrine. This was incredibly informative. And I'm just going to throw in, at this point, one comment that came through the chat that I think is related to what you said about education. And then I'm going to leave the floor to others who might want to speak to those questions. The comment comes from James Mafunga, and he says, my take is that with mass valuation result in fair administration because you involve everyone in the tax payment, which is this idea of everybody paying their fair share. However, what is needed is to invest in awareness to ensure that everyone is taken on board in the tax payment. So again, this idea of awareness and education is certainly coming through in the audience as well as through your own interventions. Does anyone else wants to come in on this idea of targeted efforts for registration? I'm going to ask you to be quite brief because I know that we have quite a few other questions, but I want to give you an opportunity to come into that. Yes, Edward, please go ahead.
Yes, thank you, Giulia. I'll just try go to the comment that said the cost of targeted could be higher. I think we should make most of our decisions to the best we can on the evidence. So far, at least also what the paper shows, is that mass has less benefits marginally based on the data that we have so far. So in terms of targeted, what I want to say in 10 seconds is the cost may be higher if you look at it, but analytics and data can make it go down. But what's more important is that even though the cost is higher, the marginal benefit is even higher, such that the overall cost or cost to revenue ratio or the marginal implication of that additional cost is low when you compare it to the revenue you get. While mass registration, on the other hand, may seem to have a low cost, but the cost per unit added into registration is even much higher. That's what I wanted to bring in. Thank you.
That's such a good point. So it's, the point here is how to maximize revenue for a given effort. And that's where the idea of targeting registration comes from. Does anyone else amongst our panelists want to talk about these questions about targeted registration? Otherwise, we can move on to another round. I'm going to ask Max to ask the next round, but let me first pause and see if there's any other comment on.
Yes, can I come in as well, Giulia?
Please.
Yes, there was a comment whether how you target when in fact that the businesses are not even identified. How do you target it? And so here, with us as Israel, as I said, we had rented property aspects. That's registration of rented property. For that, we use third-party data. You can also use third-party data sources. Say from the city council, from the local council, they have their own analysis. They've already done a whole survey in terms of property taxes. So you can make use of some of the data they have in terms of rented property, which we now use to actually identify those that are within the threshold. Because if you are not within the threshold that we know, then there's no need. But then also to target those of higher income, you also have to look at the location. For instance, for businesses that are rented or any stores that are rented within the CBD or within the touristic areas, we know obviously they will be within the threshold. So instead of just targeting everyone, we look at those within the central business districts and also those within the beach area. So at least with those area location, these ones would be those with higher income. But then also for those that you don't know at all, whether in fact they have higher income or not, how do you target them within the threshold? Here, we had to train the field staff in Sierra Leone in terms of how they have to look at the turnover in the questionnaire for registration. We added an area that has to do with turnover of the business. Because with us, we did not just register automatically into the registry. We had first a tool that we use, a central database within the research department. We use the Kobo Collect tool to actually configure the registration form into that Kobo Collect tool. So once the information comes on the field, it comes to that central database. And this is where we do the cleaning of the data, even before it goes into the register. So by the time it comes here, we'll now identify those who are of higher income, even before we just register, those who are within the threshold. But also we encourage the field staff to actually look at the content, of course, of the businesses that are going to actually see, the new businesses that are seeing, whether in fact, based on the content of those businesses and the size of these businesses, the thing that convince, in addition to the turnover question, whether they are convinced that they'll be within the registration database. So I just wanted to add that as some of the criteria also look for identifying businesses within the income range.
Thank you very much, Philip. Really useful. Dennis, I saw you had a hand up. Did you want to contribute to this question about targeted registration? If so, I'll invite you to do that now, please.
Sure. Thank you, Giulia. It's just a bit of a mixture of both. I just wanted to make sure to bring out the fact that, targeted registration is inevitable in our circumstances as a tax administration, because there's some. Sorry, am I being heard?
Yes, we can hear you well, and we can also see you now. So thanks a lot.
Sorry, my network's a bit, all over the place. So what I wanted to bring out is that targeted registration, first and foremost, in our context, is inevitable. Because look, the reason why the legal framework tries to bring out this fairness aspect is to bring, at least put in place thresholds for who is supposed to register. To try and make sure you don't bring in, each and every, every business operator. It's meant to ensure that it's only those who are supposed to be in the tax system. So now the approach that has been taken by the tax administrations, including ours, is that, let's first bring everyone on board, because we cannot gauge who is transacting what for the monitoring aspect, and then who needs to be in the tax registry. So achieving those two can sometimes be a bit, blurry in terms of the line. So what happens is we definitely have to make sure that it is only those who are big enough, who are hiding in the informal sector. Those ones are the ones that we want to bring, and they're supposed to be in the tax register. So we have to do a bit of targeting. So as we do targeting itself is not going to again be the solution, because you want to make sure that whoever you've targeted actually you will be able to abide and oblige with their compliance obligations, with their payment requirements, with their obligations. So this has to go hand in hand with how do you engage, how do you bring them on board, how do you handhold them to make sure that they know their obligation, they're able to meet the obligations. That's when all these aspects of taxpayer education And you know, from the study that we did, it showed that there are high chances of someone being able to file and even pay a return if the education, if they're educated on what to do, if they're supported in this whole journey. So we target and we put in plan. I mean, we put in plan all the, you know, using the different tools, risk assessment, the integration with all these third parties, and then saving these people, then bringing them on board, gradually educating them, giving them all the material they need, making it so simple for them to comply. So all these were brought together. They will now help in achieving and ensuring that the fruits that you're targeting are actually visible. So it's one aspect to target them, but also what do you do in terms of the journey? How do you handhold them all the way to make sure that they not either drop off along the way, or, you know, they also feel like they're not challenged to meet the obligations. Thank you.
Thank you very much, Denis, for that. We have quite a few other questions. So, Ronald, I'm conscious that you haven't spoken to this question, unless you want to come in with some brief remarks, which would be, of course, very welcome. Do you want to do that? Otherwise, we're going to move on to other questions.
I think that was sufficient. You can move on.
Excellent, thank you. So I'm going to ask Max to ask a few of the questions that came up in the chat, as well as his own. So Max, over to you for this next round.
Brilliant. Welcome. Thank you, Giulia. We could do this for another couple of hours. So I think it's a really good sign that there's interest in this, that the number of questions we've had. And also, I think it's been a really great conversation where we can see that almost everybody has experience with this topic. And I think that's made for a very productive conversation, on top of the fact that everybody has a slightly different context. I also just want to say, I think Edward put out this term of productive registration, which I think might be a really, really good way to think about this going forward. I fully take Philip's point that I think thinking about how to do this better is a useful way of thinking about it, and maybe thinking productive registration might be a term to group this around. I also want to pick up Philip's point on sensitization, which I thought was really important, and nobody else had expanded on it as much. I think, especially when we think about new taxpayers, thinking about that interaction when someone's getting registered is their first interaction, or their first meaningful interaction, or a really meaningful interaction between them and a really central part of what the state does, is important to highlight, and that interaction might take a bit longer than what's your name, what's your address, and how much money have you made in the past year, and that time needs to be allowed, and that educational aspect needs to be allowed, I think, is a really important point. So I'll try to summarize 3 questions that kind of came out of the chat and the discussion. The first is, there's been a lot of speculation in the literature, but we don't have a lot of data on where these exercises are coming from, where the motivation for them is coming from. And in relation to that, there's been a lot of talk about goals, right? That, for a revenue authority, a large tax register is an intuitive goal. So one question to the panel is, if we recognize that number of people in your tax register is not the most productive goal, what is? What are alternative goals we can think of that might be productive? The second is, Philip mentioned this point of timing. So I wanted to ask the panel, obviously trying to register taxpayers at different moments in time is really dependent on the wider context. And the context right now is not easy. If you're a revenue authority and you're trying to register people at the end of a pandemic, in many cases in an ongoing protracted economic crisis, in a context where also a lot of the taxes that are being collected then don't necessarily go to new services, but go to debt servicing. To what degree does the current kind of economic and political context make it more difficult to register? And then the third question that came from the chat was, how does mass registration deal with the fact that a lot of smaller firms have a very high rate of bankruptcy, of kind of dropping out of the sector, switching between activities? A lot of these are own account workers that might not have kind of a stable medium-term economic operation. How does registration deal with that? So with those 3 questions, and I think hopefully some things to choose from, I will give it back to the panel.
So, Ronald, why don't we start from you, since you had a chance before? So please go ahead.
Yeah, okay. Thank you so much. I think I'll start with the last one on registration and then bankruptcy of small firms. I think my first view on this is the fact that when we register these taxpayers, let's not look at where they are contributing revenue. Because when we register them and we target them in terms of revenues at national level, and we forget that they are paying a lot of money in terms of informal taxes and at the local government revenue, that is what will cause many of them to actually get out of the market. Because what we know, for instance, is that much as we say that these small businesses are not paying taxes at the national level, which is actually true, they are paying very little or even not paying at all. What we know is that they have a very big burden outside there of the local government revenues. These are actually the major fees or whatever that are affecting or even pushing many of these small businesses out of the market. There are also other informal businesses, informal charges, which are actually far, far heavy than the national taxes. So to reduce on pushing most of these small businesses out of the market, we also need to look at this whole tax structure, including the informal taxes, including local government taxes, and then the national taxes. Actually, the truth is, at least in Uganda, because we did this study, what is affecting these small firms are local government fees and informal charges. So we need to think about this more carefully. And then the other thing is, in terms of these small businesses, like when I was concluding my first presentation, is that I think because revenue authorities have this understanding that by mass registration, we shall be trying to reduce the informal sector and trying to expand the tax base. I think it is time that revenue authorities split registration into vertical and horizontal. And my effort here is that let's look at the current register. We have so many individuals and big companies actually with some sources of income that we know and quite a lot that we don't know. So maybe the focus should now be on getting into these current registered taxpayers that we are currently calling formal, but with a lot of informal sources of income. That will help us to at least generate more income and tax actually the right people than actually bringing these small components, these small taxpayers in here. I think that's what I can say. There is one thing I wanted to mention about, it came out in the comments about the gender component. What I wanted to say there is that what we saw with mass registration is that women were actually more targeted.
Mm-hmm. Yeah.
What do I mean here? What we saw is that this mass registration, it is door to door. They move door to door, and now women were more likely to be operating businesses that required a physical presence. And when we're looking at the register, many of them were actually women because they were operating salons, they were operating restaurants, they were operating small shops. And so they captured more women. Now that was an unintended consequence of mass registration. Then the men, most of the men were actually in transport sector, operating transport. In Uganda, we call it taxi operators. Now, these are mobile, that the door-to-door Ministry of Registering Taxpayers could not capture them. When they see revenue authorities coming, they move to another location. So we need to think about this when we implement them, who is actually affected more. So in terms of the initiatives, we need to come up with initiatives that are sector-specific. If we are going to register fairly and remove that inequality in terms of who we are bringing on the taxpayer register.
Thank you. Thank you very much, Ronald. And thanks for bringing in the gender angle as well. It was one of the questions, but it's also one of the things that I know we all work very much on in our different capacities. I'm quite conscious of time. So what I'm going to do is I am going to now, so all of the panelists have had a chance to respond to some of the questions. There are also some questions that weren't asked. We simply do not have time to get to all of them. Please be assured in the audience that we didn't really manage to prioritize, except that we tried to group them in a way that we could ask as many of them as possible. But thanks a lot for your active engagement. This was an incredibly useful discussion. I think I would like to use the last couple of minutes to give an opportunity to all the panelists to maybe give one final message. And I'm going to ask you if you could keep it like strictly to 1 minute each. You might want to address very quickly one of the questions that were raised that you haven't had a chance to comment on, or just leave us with some final wisdom on this issue. Just be reassured that this is an ongoing conversation. So we wanted to make sure we have this webinar to hear from our wonderful panelists today, and I think that was incredibly engaging and interesting. But we're also planning to publish a blog later on, and I would encourage anyone in the audience to be in touch with any of us from the ICTD if you want to continue that conversation. If you have questions, we will try to address them separately in whichever way we can. So with that, I will pass the floor over to our panelists. Please keep your final remarks strictly to 1 minute. Why don't I start from Edward, if that's okay with you?
Yeah, yes, thank you, Julie. Yes, I wish I had 1.5 minutes so that I can respond to Max's question, but I'll leave it and say, we are not saying taxpayers shouldn't be registered. Taxpayers should be registered, but we should target how we register to balance between the need for registration and revenue productivity. And also, I think we should focus more on taxpayer education and engagement such that this registration process is more voluntary, and then we have the right taxpayers. So generally, our focus should be not registration numbers, but reducing the tax gap and encouraging voluntary compliance. And that would, and also the mass registration, the idea that it's gonna cause people to comply as a scare tactic, it will only be temporal. We need longer term effects. That's why we are going for the education and engagement. And therefore, we are saying, let's look for more productive goals, not just registration, but after we register, what do we get out of the registered taxpayers should be the bigger question. Thank you very much.
Thank you very much, Edward. Dennis, can I ask you to provide your final remarks, please? And I'm going to go to Philip, Damacrine, and Ronald, so you can just step in.
Thank you, Giulia. So for me, I think one is in summary, I think we need to change the goals of setting our expansion programs onto the number, merely the number of tax registrars, but rather than, focus more on the active, how many active who should be in the registry. Active registration should be focused. What does that mean? That means it's a two-way street. It requires internal reorganization of the tax administration and also the external approach. In the internal, that means we need to relook at our tax registry. We need to look at the quality of the register itself. We need to make sure that we embed skills and capabilities within the tax administration to utilize the information that we are bringing at our disposal through expanded integrations. And then the third, of course, when we are talking of the external looking, is how do we engage with the external partner, integrate as much as possible, but also help those institutions to also work on the quality of the information that they're sending to the tax administration. Having that, then that means we'll more likely target the quality of the registrations we want, as opposed to just mere the numbers. Thank you.
Philip, Damacrine, and Ronald, please provide your remarks.
Thank you very much, Julia, and thank you very much, everybody who joined this webinar. I'm still convinced that mass registration is not as bad as people think it is. All we need is we need to assess its success based on the objective on which it sets. And I know revenue can always be the objective, but it can also be more of a long-term objective. If you think you can get immediate revenue from mass registration, no, it cannot happen. As if something happening, that will happen mostly in the longer term. So all I believe is that all we need to do is to make it better so that the outcomes can be better. sensitization, improving data quality, and of course, doing follow-ups. Because we just register the taxpayer without having service centers that can actually improve on their compliance, I mean, you're just leaving them alone. So for new taxpayers that are registered, you need to make follow-up with establishing service centers in the blocks in which they have been registered so that they will be able to improve compliance in terms of filing and payment of their taxes. Thank you very much.
Excellent. Thanks, Philip. Damacrine, over to you.
Okay.
Thank you. This was a brilliant discussion. I will try and use my 1 minute to answer to Max's question on the alternative goals for tax administrations. One, leverage on collaborations. Leverage on collaborations, increase the number of active, the key word here is active taxpayers, taxpayer education, focus on taxpayer education. So when you're registering taxpayers, and in Kenya, we have what we call incubation. After registration, there's an incubation stage for the taxpayer. And in that incubation stage, the taxpayer is monitored, educated, and after a certain period, moved into the active database. So focus on taxpayer education, research and intelligence gathering. I think if we spend more time on research and intelligence gathering, most of these issues that we're experiencing would not be issues. We'll be able to find answers from the research and intelligence gathering that we are doing, market research, and after that, then apply what we are finding from research and intelligence. It is something that tax administrations have not paid keen attention to, but it is time that we focus more on research and intelligence gathering. And then finally, as Edward said, when you do all this, it is going to enhance voluntary compliance. So the two take-homes are, let us focus on collaboration, research, and intelligence gathering. That's my take. Thank you.
Thank you very much, Damacrine. And last but not least, Ronald, do you want to provide your final thoughts on this?
Yes, if I'm to summarize this, one, let revenue authorities update their taxpayer register. One, I know the law provides for that, for taxpayers to update their profile, but maybe let's be deliberate to say that every after 3 years or 2 years, you're supposed to review your profile and update it. Then two, I know many people not do it. Two, revenue administration should focus their registration campaigns in terms of updating the type of tax heads people are actually registered for, to just confirm that people are registered for the right tax heads, but also if their income sources are updated to that point. Three, if mass registration campaigns are to continue, which is actually going to happen, because I don't see a revenue authority pulling back on this, let them emphasize, put more efforts on quality of the data that is coming through. Thank you.
Thank you very much, everyone. Thank you so much to our panelists, to Max for the initial presentation, to the ICTD team, who is very much in the background to this, but is fundamental to making this kind of event work, and to the audience. You were all really engaged. I really appreciate that. I'm not going to be able to have a summary of what is said because it was such a rich discussion. I'm not even going to attempt that. But I really want to share a very heartfelt thanks to speakers, to the audience. I know everybody is very busy, so thanks for choosing to spend this long time slot, an hour and a half, with us speaking about mass registration campaigns. I hope you found it worthwhile. I certainly learned a lot. So many thanks to all the speakers, thanks to the audience, and I look forward to continuing the conversation. Thank you.